Welcome back to Gold Rush Reporter, where we cut through the noise and get straight to what really matters in the world of precious metals. I'm your silver analyst, and today's story is one that has everyone watching closely. Silver is holding strong near the $49 an ounce. And while that might sound steady on the surface, there's a lot more happening underneath. The market seems to be waiting for the Federal Reserve's next move, especially the upcoming monetary policy speech. And it could be the spark that decides where silver heads next. Here's what makes today's situation so interesting. Despite the fading optimism around a Fed rate cut, silver hasn't given up much ground. In fact, it's showing surprising strength. Typically, when the Fed turns less dovish, assets like silver tend to weaken. But this time, the opposite is happening. We're seeing steady demand from investors who still see silver as a safe haven, especially now that US-China trade relations are showing signs of improvement. That alone is a strange mix. Fading dovish bets usually mean pressure on silver, but instead, we're watching it hold steady near its highs. Now, if negative sentiment had continued like before, silver should have dropped much lower by now. After all, it already went through a serious pullback. From 54 to 49 C, a sharp correction that usually shakes out weak hands. Yet, here we are, holding steady. That tells me something significant. We may have hit the bottom of this current downtrend. I truly believe that the days of silver hovering at 42 are gone. Looking ahead, I expect some sideways movement, perhaps bouncing between $49 and $52 as the year wraps up. But if momentum holds and conditions stay stable, I wouldn't be surprised to see $60 silver next year. Of course, that's assuming the best case scenario. No major geopolitical shocks, no unexpected moves from the Fed, and continued investor interest. Now, here's where perspective really matters. Even if we look at this situation through a negative lens, we're still sitting within the same price zone as silver's all-time highs. Think about that. A few months ago, most people would have called this a dream scenario. Silver is holding near record levels, and that says a lot about how the market views its long-term value. The psychology of price plays a massive role here. When investors expect dips, they often miss the bigger picture. So, what do you think? Has silver truly found its bottom, or is there another pullback waiting around the corner? I'd love to hear your thoughts. Drop your opinion in the comments below. Because today's silver story isn't just about charts or numbers, it's about how sentiment, timing, and psychology all work together to shape opportunity. And that's exactly what we do here. We explore those deeper layers together. All right, let's dig deeper into what's actually driving silver's price and what the data tells us about where it might be heading next. Stay tuned. The numbers reveal more than most people realize. Silver continues to show resilience even as the market grows cautious. During today's Asian trading session, prices held near Thursday's high of about $49, which is impressive considering the pressure coming from shifting expectations about the Federal Reserve's interest rate policy. Traders are now reducing their bets on another rate cut this year, something that usually hurts non-yielding assets like silver. Yet, despite that, the white metal refuses to drop. That tells us the underlying strength in the market isn't just about rate speculation. It's about confidence and positioning. According to the ACME FedWatch tool, the chances of a 25 basis point cut in December have fallen from 91% to 72%. This shift came right after Fed Chair Jerome Powell stated that a rate cut in December is far from a foregone conclusion. Normally, such comments would create downward pressure on silver, as higher rates make precious metals less appealing compared to yield-bearing assets like bonds. But silver is holding its ground. And that's a signal worth paying attention to. What we're seeing now is a market testing its own conviction. Many analysts expected a sharper pullback, especially after silver dropped from $54 to $49, but it hasn't happened. That suggests the correction phase may be nearing its end. For silver to maintain strength under these conditions, it needs consistent demand, both from investors and industrial sectors. Fortunately, those factors remain solid. There's also a strong psychological element at play. A lot of investors were expecting another major dip, maybe down to 40 or even the 30s. But those levels haven't materialized. The fact that silver is holding near $49 tells me that the market has absorbed a lot of pessimism already. This could be what we call a sentiment bottom. A point where fear has peaked and the only direction left is up. Of course, we can't ignore the role of global trade. Improved. US-China relations have softened demand for safe haven assets, but silver's dual identity as both an industrial metal and a store of value gives it a unique advantage. When investor demand cools off, industrial demand often steps in to stabilize prices. That's exactly what seems to be happening right now. So even with less optimism about rate cuts, silver's floor remains solid. If the Fed continues to hold rates steady and trade tensions remain calm, the downside risk from here looks limited. In fact, what we could see next is a Powell range-bound consolidation. Between $48 and $52, a healthy phase that could set the stage for another leg higher. That's why this phase is so important for long-term investors. If we really have reached the bottom, then every small dip from here could be a buying opportunity before the next rally begins. The market might be quiet now, but quiet periods like this often come right before the next big move. Next, let's break down what the technical picture is telling us. Because silver's support and resistance levels right now might be signaling exactly where the next major price breakout will begin. From a technical standpoint, silver is currently in a very interesting position, one that shows both caution and strength. Right now, the price is testing the 49.20 resistance level, which has formed what analysts call a triple top pattern. This means silver has tried to break past this level 3 times already, but each attempt has been met with rejection. Typically, when this happens, it signals that buyers are temporarily losing momentum. But here's the twist. Despite these rejections, the price hasn't collapsed. That tells us the bulls are still in control, quietly building strength for a potential breakout. If silver manages to break above 49.20, especially with strong trading volume, we could see a sharp rally into the $52 range very quickly. A breakout like that would likely attract even more traders and possibly even institutional buyers who have been waiting for confirmation before entering the market. On the flip side, if silver fails to hold its ground and drops below its short-term support level at 48.15, then we could see a small correction towards 47.25 or 45.50 klokar. That's normal price action, not necessarily bearish, just part of how markets breathe after a strong rally. For short-term traders, these levels are crucial, but for long-term stackers, people who buy silver for wealth protection rather than quick profits, the short-term fluctuations don't mean much. As I always say, if your horizon is years, not days, then every dip is an opportunity. That's why I personally don't worry about whether silver is at $48, $50, or even $55. I'm focused on what it will be worth in 5 to 10 years, when global supply constraints and currency devaluation begin to show their real effects. Now let's talk about why these resistance and support levels matter so much right now. Silver has been bouncing between the $48.15 support and the $49.20 resistance. Each time it pulls back to $48, buyers step in. Each time it approaches $49.20, sellers take profit. This constant tug of war shows how evenly matched the market currently is. But such balance doesn't last forever. When it breaks, it tends to break hard. And here's something that often gets overlooked. Silver's 20-period exponential moving average, EMA, is hovering right around that 48.15 level. As long as silver stays above this line, the broader trend remains bullish. A close below it, however, could signal a short-term pullback. But again, that's short-term. The long-term story remains intact. Silver continues to gain support from both physical and investment demand. It's also worth mentioning that global market activity is playing a key role in maintaining these price levels. In India, for example, recent buying pressure in the gold market is indirectly supporting silver. As physical demand for precious metals increases, it keeps the sentiment across the entire metals sector positive. So, to summarize this section: resistance, $49.20, the key breakout zone. Support, $48.15, must hold to stay bullish. Deeper supports, $47.25 and $45.50 in case of a correction. Upside potential. A confirmed breakout could lead to $50 to $52. We're right at a crossroads. The market is coiling, building energy for the next move. Whether it breaks upward or downward, the key is how strong the volume will be when it happens. In the next part, I'll explain how this technical setup connects with investor psychology, and why silver, even at $49, still remains one of the most undervalued assets in the entire commodities market. When we talk about silver, it's not just about charts, candles, or resistance zones. It's also about mindset. Investor psychology plays a huge role in how markets move. Right now, we're seeing a fascinating divide between short-term traders and long-term holders. Traders are nervous because silver has been stuck between resistance and support, unsure whether it will break higher or dip lower. Long-term investors, on the other hand, are calm, even confident because they understand the macro picture. Here's the truth. Silver's long-term fundamentals haven't changed. Industrial demand continues to rise, thanks to sectors like solar energy, electric vehicles, and electronics manufacturing. Supply, however, is struggling to keep up. Many mining operations are facing higher costs and reduced output. That imbalance is what keeps silver's long-term outlook strong, no matter what happens in the short term. And that's exactly why I always remind viewers, this isn't a get-rich-quick trade, it's a wealth preservation strategy. If you're stacking silver today, it's because you believe in protecting your purchasing power, not chasing short-term gains. Prices will fluctuate. They always do. But over time, silver tends to reward patience. Now, let's touch on something important. Individual financial strategy. Every person watching this video is in a different financial situation. Some started stacking silver years ago when it was $15 an ounce. Others are just getting started now at nearly $50. And that's okay. There's no wrong time to begin if you understand why you're doing it. What matters is that you stay consistent, disciplined, and realistic. I don't recommend following anyone blindly. Not me, not any other analyst. Instead, focus on your own financial goals. Ask yourself, why am I buying silver? What's my holding period? At what price would I sell, if ever? Answering those questions honestly can prevent emotional decisions during market volatility. Remember, there's a big difference between someone who's retired and already financially stable and someone who's working to build their first real stack. Each person's approach will look different, and that's completely normal. Even if silver pulls back a few dollars from here, it doesn't mean you've made a mistake. It's about time in the market, not timing the market. The more years you hold silver, the more you understand that dips are opportunities, not disasters. And here's one more thing. Perspective matters. A lot of new investors panic when silver moves down a couple of dollars, but seasoned stackers see that as a gift. If you truly believe silver will cross $60, $70, or even $100 one day, then today's prices, whether it's $48 or $52, are just details on a long-term chart. So whether you're adding 1 ounce a month or 100, the principle is the same. Keep stacking, stay patient, and don't let market noise shake your confidence. In the next and final part, I'll wrap this all up by sharing why this current setup might be one of the strongest bullish signals we've seen for silver in years. And of course, I'll leave you with my closing thoughts and channel outro from Gold Rush Reporter. As we wrap things up, let's take a step back and look at the bigger picture. Despite all the noise, silver has proven its strength once again. Even after major corrections from the highs of $54 and $52, it's still holding steady around $49. That alone tells us something important. The market refuses to give up its gains. Silver is showing resilience when many expected it to crash back into the 30s. That's a clear sign of strong underlying demand and long-term confidence from both investors and industrial users alike. I personally believe this stability marks a turning point. The days of silver sitting comfortably in the low 40s may be behind us. We could now be entering a phase of accumulation where prices consolidate before the next big breakout. As global uncertainty continues, from monetary policy shifts to trade negotiations, silver is quietly becoming a preferred hedge once again. And with inflation still lurking and currency trust eroding, that demand is only going to grow stronger. Now, I understand there's still skepticism. Some people think silver can't sustain these levels without crashing. But we've seen time and again that the metal behaves differently when real-world demand meets limited supply. Even the slightest spark, whether it's renewed investor optimism, industrial shortages, or an unexpected geopolitical move, could send silver surging beyond $55 and possibly even test $60 sooner than most expect. For me, as a long-term analyst and investor, it's not about guessing next week's price. It's about recognizing the trend. And that trend, despite every pullback and correction, continues to point upward over time. Silver has a way of testing patience before rewarding conviction. And for those of us who've been watching closely, this looks like one of those defining moments. So, what should you do now? Stay informed. Keep studying the market. Watch how silver reacts to the upcoming Fed comments, but more importantly, think long term. These small dips and spikes are just part of the journey. The bigger move is still ahead. Before I go, I want to thank you all for tuning in today to Gold Rush Reporter, your trusted source for honest, straightforward silver analysis. If you found value in today's breakdown, make sure to hit the like button, subscribe, and turn on notifications so you don't miss my next update. Also, I'd love to hear from you. What do you think? Has silver hit its true bottom, or is there one more correction left before the next rally? Drop your thoughts in the comments below. I always read your insights, and they help fuel these discussions. Until next time, stay sharp, stay informed, and as always, keep stacking. This is Gold Rush Reporter, signing off.